How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. As you can see, last we talked about a false break or change in trend. And now the false break or change in trend occurred here this Thursday. And I'll zoom in so we can take a look at that. So Thursday comes down and takes out this swing low. This swing low was a part of our bullish trend formula, waiting for a higher swing low to form. We finally got it. So it took a while for it to happen. So we're breaking swing highs all the way up going into March, and we were just waiting for a higher swing low to form for us to give that continuation higher. We got it, but then Thursday comes all the way down and just runs it right out. So this could be a change in trend because this could be bearish momentum coming into play. Now, if the formula is going to change, it would look like this. So swing low broken. This is now going to be changed to bearish momentum. Now we're waiting for what? A lower swing high to form. And odds are that lower swing high is going to form somewhere within the means of this PDA right here. So we can see we got this SIBI, sell side imbalance, buy side inefficiency, a fair value gap to the downside. We can also see it looks like that lower time frame entry technique I speak about on the 1 minute time frame for all the kill zone models. You can see how there's a swing low here that's ran with a fair value gap, and the swing point is inside the fair value gap. Very interesting thing we see here. So we know the market is very fractal. Now, if we see this occurring in EU, what should we be seeing in the DXY? We should see the DXY potentially going higher, right? And showing signs that it wants to trade higher. So we talked about how price is going to most likely get back to this fair value gap and potentially see a lower swing high and then sell off. That may not be the case at all because price could be changing trend. Price can now be, we'll get rid of this, get the chart clean a little bit. Price broke a swing high formation right here, 1, 2, 3. And now we have a fair value gap to the upside. So we got a busy buy side imbalance, sell side inefficiency. It was inefficient on filling the sell side by going up so fast with speed. Price may want to tap back into this, right? Price runs here, creates a short-term high, runs back up. It's going to make a short-term low here inside this PDA rate and then potentially trade higher. To what degree we get to, maybe we potentially get back to March's opening price. We could get back there. Or we get back up to some type of previous daily high. So price runs previous daily highs that has not mitigated yet. Let's take a look at the yen. So look at the yen futures. So the BOJ as well. So we're looking at a lot of things. We're looking at an intermarket analysis. The BOJ has their interest rate decision coming up shortly. I'm not sure exactly what day. I think it's either tomorrow. Let me just double check. Where is our trading? No, events, continuous contract switch. No, I'm just looking for news. Bear with me. I think it's tomorrow. Yeah, it's tomorrow because I know the Feds is on Wednesday. So I think tomorrow we're going to see the BOJ. Let me go to UJ. Easiest shot to do. Yeah, it's tomorrow. So the BOJ. So the forecast is everyone's, at least, the professionals, and I'm putting this in quotation marks because even the professionals get it wrong, The analysts are saying that the BOJ is going to leave a negative interest rate policy and go into a neutral and then positive, right? Bank of Japan has been in a negative policy rate for some years now, since 2016, since they moved into a negative rate. So them going neutral and then potentially positive in the near future or then some is definitely going to be a big shakeup in the market because that increases yields, right? It makes the yen more valuable. Over time, we're going to see how that plays out because other central banks have to play a certain role in what combating inflation in their country, in their nations, in their cities, in their towns, and also being competitive with their fiat currency. So making their fiat currency a lot more attractive to investors or central bank traders. So be cautious about all of the interest rate decisions because they're the primary driver to fiat currency. When the rates go up, the yields go up, and that drives investors to come into the currency and buy it up. If the rates go down, the yields go down, and investors leave and seek another asset or commodity or another fiat currency or cryptocurrency to place their money so that they can have some type of rate of return on their money. Sitting on cash may not be the best for a lot of these large investors, private investors, and commercial investors. They want this money to make more money. They don't want sitting cash. I'm not saying they don't have sitting cash, but primarily, most of their equity is going to be always funneling money, making money. If we look at the bond yields for a second, so if we look at the bond yields, right, treasury yields, look at the 2 year, complete turnaround, complete turnaround. You can see how it raids sell side here, it raids sell side on the previous daily low here. This swing low is rated, this swing low is rated, and then it turns around. It just goes on a run. It goes for 1, 2, 3, 4, 5, basically a whole week, an entire week of bullish price action just going up. The same can most likely be seen on the 5 year, the 10 year, and the 30 year. And even yesterday was a down candle, and you can see how tomorrow it runs up again. The yields have flipped back into a bullish trend. Now that would signify to me that dollar is going to gain strength. So if I see the yields going up, right, the United States 10 year, 2 year, 5 year, 30 year government bond yields going up, I know more than likely the dollar is going to move in accordance with it because they're directly correlated. This is a question someone had in the chat. They're directly correlated. Just look at it side by side. Let's take a look at this. So let's say we just do the DXY on this real quick. DXY. Look how directly correlated this is. It's following the exact same thing as the yields. The yields are following the exact same thing for the DXY. You can see I'm not saying it's picture perfect. It's almost picture perfect. But you can see when the yields go up, dollar goes up. When the yields go down, dollar goes down. So we're seeing the yields coming back into play. Now, this may be an effect because of the Feds or Fed Chairman Powell and the decision makers keeping the rates higher for longer. We haven't cut yet. The Feds have not cut the rates yet. So since the rates are still higher and we're still holding it for longer, every new month or every couple months where the rate decision comes up, we're like, oh, we're not actually going to cut rates. We're going to leave it and stay neutral. We're not going to move it at all. That allows investors to be like, you know what? US dollar is still valuable, which is why I think a lot of the yen crosses are going to pick back up in the near future. If the BOJ, this is what I'm saying, if the BOJ leaves its rate negative and the Feds remain positive or do not cut rates, the yen crosses will rally again because yen is going to depreciate once again, and all the other fiat currencies against the yen, the Japanese yen, is going to gain value. And you're going to see UJ, AJ, EJ, GJ, NJ, CADJ, Swiss J, all the other yen crosses that you could think of most likely go up in price and gain value. So if we had to look at some of the yen crosses in recent time, this is UJ, right? It looks like it looks just like how the bond yields made that full drop down and it's looking to turn around again. You can see how price recently broke a swing high right here. Odds are we get a higher swing low in the near future. Any down candles, I will look to buy and look for price to target higher price action. You got these clean highs up here. Clean highs. UJ may make record highs this year still. It may still be on the path to making all-time highs, record highs. Let's get another pair. NJ. So NJ sold off. We can see. Don't worry about the annotations. Let's see. These are old annotations. We're most likely going to see what? Price consolidating, right? Getting ready to gear itself, right? Accumulating buy stops and sell stop orders, right? Building in market sentiment and most likely creating a false break to the downside and then running back up higher, or failing to make a break on a low and making a higher low and price continues to trend up higher. CAD-J, same thing. Looks just like the bond yields, looks just like UJ, looks just like the DXY. Ah, a lot of people don't realize the DXY is correlated to the yen crosses. When the DXY goes up, that means yen is going down. So that is, in return, you're going to see the yen crosses appreciate in price. Take a look at that. Take a look at the DXY and compare it to the yen crosses. I'm not saying every single one, and I'm not saying 100% is directly correlated, the percentage, but you'll see over time when the dollar goes up, the yen goes down, and the yen crosses go up. Look at that. EJ looking to go higher, right? Rating what? Previous daily lows. GJ, same thing. It's looking to turn around. Look at these clean highs, double tops, triple tops, whatever you want to call this. Swiss J, been consolidating for a while. This is a mess to trade. This was a mess. If you were trading Swiss franc versus Japanese yen, I would pray for you. This is not it right now. This right here was not it. But we expected that. We talked about if you're really attentive and you remember, we talked about how Swiss J was gonna most likely run a high and then completely dump. And that's how we saw AJ and all the other yen crosses sell off. And now it looks like it's accumulating again. It's moving sideways. It's consolidating underneath this consolidation. There's reaccumulation. Orders are building in. Are we going to see higher swing lows building in here and higher swing highs trending back up to take out these clean highs that it engineered? Remember, the market is not doing anything random. It's all strategic. It's very methodical. It's never going to sit here and say, you know what? Today, I just feel like selling here. Today, I just feel like buying here. I just feel like creating double tops here and creating double bottoms here. No, it says I am going to create a double top right here. And later in the near future, I'm going to come back and raid those highs. Later in the future, I'm going to come back and take out those double bottoms that I created 2 months ago, last week, a couple days ago, whatever it is doing it on purpose. There is purpose behind its movement. Now, the way I try to tell the storyline, right? I think about it as if I'm telling a story and I want to see what's going to happen. There's always two paths. Generally, there's always two sides to the path. It's either a false break or it's a change in trend. And that change in trend is going to be the new trend and it's going to keep flowing that way until we get to another support and resistance classic. I'm putting this in quotations mark, support and resistance, which is most likely a swing high or swing low or double top or double bottom. Then we get to saying, okay, are we very overbought? And is the price most likely going to sell? We may not know, but how do we analyze that, or how do we come to a better picture into market analysis? You see how I just showed you several different pairs? I showed you bond yields. We talked about interest rates, potential hiking or cutting. We talked about all those things. This is what it means to be a trader. It's not easy, but as you progress in your career, you'll start to be able to piece things together. Like, I like this in my analysis. I like this in my analysis. I don't really like this in my analysis. Many people ask me, do I use COT data? Hardly. That's just my take on it. Do I glance at it from time to time? Absolutely. I look at it once in a while just to see, okay, the commercials are doing this. Okay, I hope to see, the large specs and the small specs are opposite to what the commercials are doing. Something along the lines like that. But that's still a lagging indicator because that data that comes out is a week late. By the time you see those new numbers, you're already into the next week's trading cycle. So that data that you're looking at is from last week's longs and shorts and added positions or subtracted positions. So I don't like to bank on that. Seasonal tendencies. You guys see that again. We talk about seasonal tendencies as well. It's not guaranteed, but it's a roadmap. But notice how Deontay is piecing all these things together. I'm taking a little bit of this. I'm taking a little bit of this. I'm taking a little bit of this. And I'm taking raw price action. Higher highs, higher lows, bullish trend. Lower highs, lower lows, bearish trend. It doesn't get any more simpler than that when it comes to finding trend. But how to enter in those trends can be a little more difficult. Let's take a look at this intraday today. I know we're talking a lot today. And I'm about to step outside because I've got to go somewhere. But let's go on a 15-minute time frame. And let's go right back before 7 a.m. So right here. So that is that Sippy here, right? That's that daily fair value gap to the downside that we're looking at there. We have price trading up into it. Notice when it trades up into it when? New York session. So there goes the time aspect. It's trading into this PD array during a kill zone. Before this kill zone, we have something called a London lunch, and that's a dead zone. That's going to be from 5 a.m. to 7 a.m. So I put that in the poll today because I was trying to test to see where people's knowledge is with the information that I'm trying to put out to community. Some people got it right, some people got it wrong. So I still got to do my part to get a lot more people to the table that we're sitting at. So we have sell side here. This is the lowest low we have within this period. Remember, this is the London lunch, 5 a.m. New York Eastern Standard Time, 7 a.m. New York Eastern Standard Time. This is the London lunch. This is buy side liquidity right here. And everything is based on the 15-minute time frame. You have this sell side here. You have double bottoms here, actually. Still a swing low. There's also another one here. We'll mark it off, but it's just a double bottom. We'll zoom in so you can see. Right, swing low, another swing low. It's a double bottom. We have the opening price for the session. That's 7 a.m.'s opening price. $7 a.m. Anything above this price point is a premium. Anything below this price point is a discount. So we know where overbought and oversold conditions are. Let's add something on this because a lot of people say I don't talk about it enough. This is midnight opening price. It's MOP or 12 a.m. Notice how we're way above it. We're overbought. It's expensive. We're trading into a PD array on the higher time frame daily. The daily has a strong stance on the market. Play it forward. Price comes up and takes out that buy side liquidity pool. At this point, you can stalk a setup. You're looking to go short, not guaranteeing it's going to be 100% accurate, but we need to find a short above 7 a.m. That's your most ideal and pinnacle trade as a seller. Price is rating buy side liquidity, and price is above 7 a.m.'s opening price. And it's also double confluence. It's above midnight opening price. So we're very overbought. And I can only assume that we're also above Sunday's opening price. Let's see Sunday's opening price. Where's Sunday at? Yeah, we're well above Sunday's opening price. So we have a triple confluence here already. Where are we at? So somewhere along the lines here. Not sure if that's an up or down candle. It's up candle. So yeah, is it? It's an up candle. So that's Sunday's opening price there. Got like 2 minutes left. Sunday's opening price is here. Right there. Price runs up. So we're overbought. Look at the confluence here. We're overbought so much. It's so expensive. As a market maker, if I was controlling price action, I want to get everybody long. I want to get everybody chasing this price action. I want to. And here we go, intraday. We're overbought in the kill zone. We're overbought for the day. Today's the 18th. We're overbought for the week that we're starting into. I want to get everybody to keep chasing longs so that I can eventually psych them out and get them on the wrong side. Let's take a look at what happens. Let's just play it forward. Let's play it forward. Just see what happens during this kill zone. This is where we are right now. So right now we're in London close. I wouldn't be surprised if we get a retracement because that's the characteristic to London close. Maybe a retracement, even consolidation at times, or even a continuation pattern. So it could continue to sell off. But notice how they get a lot of the traders on the wrong side for the New York session. Look at how price is above 7 a.m. They're accumulating their shorts while retail is accumulating longs. Only one person is going to be a winner. And we can see the sellers won, and those that were accumulating longs above 7 a.m. in a premium are incorrect. Hopefully you found this insightful. Peace.